R. Ability to read and interpret corporate annual reports. It identifies the ability to read and interpret corporate annual reports as an essential competency because annual reports provide comprehensive information about a company's financial performance, strategy, risks, governance, and operational activities. FP&A professionals use annual reports to evaluate organizational performance, support forecasting, conduct benchmarking, and assess strategic opportunities or risks. Annual reports combine quantitative financial data with qualitative management commentary, allowing finance professionals to understand both operational results and strategic direction. Public companies issue annual reports to shareholders, regulators, and other stakeholders to communicate financial condition and business outlook. Effective interpretation of annual reports improves decision-making, financial analysis, and long-term strategic planning capabilities. Corporate annual reports typically contain several important sections that finance professionals must understand thoroughly. Common components include the CEO or shareholder letter, business overview, management discussion and analysis, MD&A, financial statements, notes to the financial statements, risk disclosures, governance information, and auditor reports. The shareholder letter often summarizes company achievements, challenges, and strategic priorities, although readers should recognize that management may present information optimistically. The business overview explains products, markets, operations, and competitive positioning. FP&A professionals analyze these sections to understand how the organization generates revenue, manages operations, and positions itself within its industry. Understanding the report structure improves the ability to identify important financial and operational insights efficiently. Financial statements are among the most critical sections of annual reports because they provide detailed information about organizational performance and financial condition. The income statement summarizes revenue, expenses, and profitability over a reporting period. The balance sheet presents assets, liabilities, and shareholders' equity at a specific point in time. The cash flow statement explains how cash is generated and used through operating, investing, and financing activities. FP&A professionals analyze trends across multiple years to evaluate profitability, liquidity, leverage, operational efficiency, and financial stability. Comparing financial statements with industry benchmarks and prior periods helps identify strengths, weaknesses, risks, and growth opportunities affecting organizational performance and strategic planning decisions. The management discussion and analysis, MD&A, section is especially important because it provides management's explanation of financial performance, operational results, market conditions, and future outlook. FP&A professionals review MD&A carefully to understand the reasons behind changes in revenue, profitability, expenses, cash flows, and strategic priorities. This section often discusses operational challenges, economic conditions, competitive pressures, acquisitions, capital investments, and future risks affecting organizational performance. Risk disclosure sections also deserve close attention because they identify uncertainties related to market conditions, regulatory changes, litigation, customer concentration, technology disruptions, or supply chain vulnerabilities. Effective interpretation requires connecting management commentary with actual financial data and identifying inconsistencies or emerging concerns that may affect future performance. Notes to the financial statements and auditor reports provide additional detail necessary for accurate financial interpretation. Notes explain accounting policies, revenue recognition methods, debt structures, contingencies, lease obligations, pension liabilities, and other complex financial matters. These disclosures often reveal information not immediately visible within the primary financial statements. Auditor reports indicate whether financial statements comply with applicable accounting standards and present fairly the organization's financial condition. FP&A professionals use these details to evaluate accounting quality, assess financial risks, and understand assumptions underlying reported results. Strong analytical skills are necessary because important financial issues, unusual transactions, or operational risks may appear primarily within footnotes and supplemental disclosures rather than headline financial figures. Interpreting annual reports effectively requires combining quantitative financial analysis with qualitative business understanding. FP&A professionals must evaluate trends in profitability, liquidity, cash flow generation, leverage, operational efficiency, and strategic execution while also considering broader economic and industry conditions. Comparative analysis across reporting periods and peer organizations strengthens interpretation accuracy and supports forecasting activities. Modern finance teams increasingly use technology platforms, financial databases, and analytics tools to analyze annual reports more efficiently and identify operational insights or financial risks. Mastery of annual report interpretation strengthens the FP&A function's ability to support strategic planning, investment evaluations, risk assessment, and performance management while improving communication with management, investors, and other organizational stakeholders.